My name is Dan Lapsiwala. I'm a director and partner at Aspiriant. I came to Silicon Valley 18 years ago to make my mark like everyone else. I believe to have enduring wealth, you need to have some sort of equity. You don't need to start your own business to have equity. You could go and start work for a startup or a larger organization and get paid in equity compensation. My job is to help clients maximize their wealth with equity compensation. The equity compensation I often see are generally startups tend to offer stock options, mainly incentive stock options and non qualified stock options. As companies get larger, they tend to offer restricted stock units, performance stock units, and they also offer employee stock purchase plans. While the intent of each kind is similar, they primarily differ around how they are taxed, and that affects the strategy to optimize their value. For example, when you exercise ISOs, you have to be very careful about AMT, alternative minimum tax. If you don't pay close attention, you may end up paying AMT taxes on paper wealth that you haven't even achieved yet. The three main considerations regarding stock options: first and foremost, the more reliant you are on stock option wealth to fund your goals, the less risk you should take with the options. Second, what I call the golden rule: wait as long as possible to exercise the options. Third, ignore the golden rule. And you need to ignore the golden rule for two reasons: diversification, if stock option wealth is greater than 25% of your net worth, or if you have changes in your professional plans. Typically, you have 90 days to exercise your vested options on departure or retirement. First, understand what you have and how your equity works. Are there incentive stock options, non qualified options, RSUs, PSUs? As I said, the primary difference is how they are taxed. Second, consider how reliant you are on the stock option wealth and how much risk can you afford. Third, develop a strategic plan to help meet your cash flow needs. Take into consideration your risk tolerance and whether you need to diversify. Most often than not, your income and your net worth are tied to your company's success. Every situation is unique and depends on many things. Speak with a professional to design your strategy based on your personal goals and the current stock price.